In this week's Ask the Expert, I'm talking with Morningstar analyst Gareth James about the federal government's $3 billion funding boost for the childhood sector, including how it's affecting some of the companies in the space and what investors need to know.
Yeah, obviously the early childhood education and care, or ECEC sector, is going to benefit from government funding increases from the 2nd of July. And we think that's going to benefit all players, so that includes the operators and the owners of the buildings from which childcare centres operate. We prefer the real estate investment trusts, the companies that own the buildings, because we think they've got less exposure to ups and downs in demand for childcare services. So one of the challenges with the childcare sector is that it's very easy to add supply. So you do have periods of oversupply and undersupply, and that can compress margins for the childcare centre operators. But for the owners of the properties, they've got much more stable earnings, and they don't experience the same ups and downs in earnings as the childcare centre operators do. So we quite like the REITs for that reason. But there's two REITs that are listed on the ASX that we particularly like, Folkestone Education Trust and Arena REIT. Both of these companies have exposure to the largest childcare centre operator in Australia, called Good Start Early Learning. Good Start Early Learning is a company that's owned by 4 charities, and that came out of ABC Learning when ABC Learning collapsed back in the GFC. And we think that Good Start is a very low credit risk, because we think the federal government would support Good Start if ever it did get into trouble. But we think it's very unlikely that Good Start would get into trouble. So from Folkestone and Arena's perspective, it's very good for those guys, because they've got exposure to a really high quality childcare centre operator. So about half of their business is exposed to Good Start. So that's another added bonus for the REITs. But one of the other reasons why we like the REITs is that they have extremely long weighted average lease expiries. So Folkestone and Arena tend to have WALEs of about 10 years, something like that. And it's typical for childcare centre operators to sign leases of about 15 years. So the turnover in the sector of tenants is very, very low. So yeah, those are a few reasons why we like the REITs.
And Gareth, you talk about the long weighted average lease expiry periods for real estate investment trusts. Can you just explain how this works and how it differs from some of the other types of property assets?
Yeah, sure. So one of the attractive things about the childcare centre REITs is that they have a long weighted average lease expiry. So the leases are usually about 15 years long, and then you have options to renew for another 5 years, and usually there are 2 options. But what we find in the childcare sector is very rarely do tenants move out of the buildings. And so that's very attractive for childcare centre REITs. And one of the reasons why childcare centre operators tend not to move out of the buildings is because most of the value in the childcare centre business is in the building, right? So people use that particular childcare centre because it's close to their work or it's close to their home, and it's got particular facilities. So yeah, we think most of the goodwill, as it were, sits in the property rather than in the business that operates from the property, and that causes this situation where childcare centre operators really don't like to move out of the buildings, and that works really well for the REITs, and it's one of the reasons why we really like childcare centre REITs as well. The other thing about childcare centres is that they are required to have a certain amount of floor space per child, both internally and externally. And that means that childcare centres are reasonably large properties relative to other types of property. And this is good from an investor's perspective, because it means that you're buying into something that has a high land backing, as it were. So if the business failed, if the childcare centre wasn't viable any longer, you've got a lot of land to fall back on with respect to your investment in the real estate investment trust.
And lastly, what are some of the other broader trends beyond the government's funding boost for the sector that are playing into the opportunities here for investors?
Yeah, sure. So the childcare sector has a number of attractive tailwinds. The key one that's been driving the sector in recent years is an increase in female workforce participation. So there's obviously a lot more females in the workforce these days, and there's a lot more demand for childcare. Childcare demand has also transferred from previously being provided by family members to a large degree to being provided by professionals in purpose-built centres. And so what we've seen is that we have a strong population growth of, say, 1% to 2% a year, but the number of children in daycare is increasing more quickly. So it's increasing about 4% to 5% a year. And that's because of this trend of females returning to or entering the workforce. So what we've seen for childcare operators is quite strong fee growth, strong occupancy growth, and that's driven strong returns for investors. One of the challenges at the moment is that those attractive attributes has attracted a lot of supply to the sector. So there's a bit of oversupply of childcare centre operators at the moment. But we think that when the new funding comes in July, that's going to give the whole sector a real boost, and it's going to make that demand-supply imbalance come back into equilibrium.
Any advice in this video is general advice prepared by Morningstar without reference to your financial objectives, situation, or needs. You should consider the advice in light of these matters and any relevant product disclosure statement before making any decision to invest.